Good morning. It's my pleasure to welcome a very special guest to the stage, someone whose career spans global finance, institutional reform, and now thought leadership at the intersection of ethics, faith, and impact. Jean-Baptiste de Franssu is a seasoned financial executive with deep roots in European asset management. He began his career at JP Morgan before becoming CEO of Invesco Europe, where he helped shape the firm's strategic growth across the region. He has also served in prominent governance roles, including as a member of the European Fund and Asset Management Association. In September 2014, he was appointed president of the Istituto per l'Opera di Religioni, more widely known as the Vatican Bank. In that role, Jean-Baptiste has overseen a significant process of reform, bringing greater transparency, professional standards, and ethical alignment to an institution with both a unique legacy and global attention. Most recently, he has taken on a new role at Le Collège de Bernardin in Paris, an influential center for dialogue between faith, society, and contemporary challenges. There he is helping to shape new thinking on how values-based finance and impact investment can contribute to the common good. Under his leadership, the Vatican Bank has also begun to explore more deliberate alignment between its investments in Catholic social teaching, an approach often referred to as faith-consistent investing. For many in this room, that may be a new concept, but one that resonates with the broader movement towards investing with purpose and integrity. Today, we'll hear his reflections on reforming one of the world's most watched financial institutions, his views on the evolving role of faith in sustainable finance, and what lessons institutional investors, foundations, and family offices might draw from this unique perspective. Please join me in welcoming Jean-Baptiste de Franssu. Jean-Baptiste, welcome.
Thank you, Carol.
You've spoken publicly about the moment we're in as a time for faith traditions to step up and help shape a better world, particularly through their role in financial markets. Why do you believe that moment is now?
Well, I think, first of all, it's probably important to say that the social teaching of the major religion, the monotheist religion, the sons of Abraham, if I can express myself like this, are neither an ideology nor a social theory as an alternative to capitalism, but rather they are trying to bring a language of faith and reason towards a committed capitalism, and that's very important to keep in mind. Now, the reality is we are very late. Religions are very late. The Christian world is very late in faith-consistent investment. Although, when you look at ESG, there aren't almost no elements of ESG that do not find their roots in the scriptures or in the teaching, talking about the Christian world or the Catholic world, in the teaching of the church. So we are late. ESG became so much important, as we all know, but we are at the origin of this approach of using financial markets for the common good, for a better society. So now it's a bit of a wake-up call, although there are differences between those various religions that I just mentioned. And I will talk about it later on, probably. Okay.
Well, let's take a step back to 2014, when you were appointed as president of the IOR, or the Vatican Bank. The bank had gone through a turbulent time. What were the most urgent challenges you faced, and how did you begin the work of reform?
I think when you look at a small institution such as the Vatican Bank, because it is a small institution, however much it has been in the press for many, many years, and it has not been in the press really for the last 10 years since I've been chairing the board. The main problematic we had with the IOR, which is a problematic that we find with many religious institutions, be it Christian or others, by the way, it's a problem of lack of competence. There is a certain degree of incompetence in those institutions, and clearly this was the major problem we had. People in charge did not have the competence to run a financial institution. And that, therefore, led to a number of problems, amongst others, which is, again, very characteristic of financial institution dealing with financial markets choosing the wrong intermediary, not being able to select the appropriate people to do business with. And that was really the core of our problem. I also always say that my office in the Vatican, the office of the chair of the Institute in the Vatican, is just 3 floors below where, and those of you that may have seen picture of this, when the Pope appears at lunchtime on Sunday for what we call the Angelus, my office is just 3 floors down, exactly under the window where the Pope appears. And I've often said that before my time, before the board that joined me, the new board that we created 10 years ago, the Pope used to say a number of things on the Sunday lunchtime, and on Monday morning when the team would arrive at the Institute, they would ensure that they would do exactly the contrary of what was said by the Pope. And of course, the Pope would criticize war, the Pope would point out at the issue of the sanctity of life and other problems. And then you looked at our portfolio, and they were full of armament, full of pharmaceutical companies that clearly did not meet the principle that we are. So it's a question of trying to ensure that we are coherent between the faith that we practice and what we do with our money.
And how much money are we talking about?
As I said, it's a small institution. Money in the Catholic Church is totally decentralized. So the money lies on the ground in the dioceses, congregations across the world. The Institute manages 6 billion euro, which is essentially made up of the wealth of the Church and some money that has been given to us to manage by some diocese or congregation.
Okay, so you've overseen a process that's brought greater transparency and regulatory alignment. Can you share what some of the biggest changes have been since your tenure began, and how those changes have enabled a shift towards more values-based investment?
So one of the key characteristics of the IOR, of this institute that we call the Vatican Bank, is that it was considered by many in Rome as an offshore center. Because for years and years, there was no tax agreement between the Vatican and Italy, and between the Vatican and other countries where predominantly our clients come from, which meant that a number of people in the past that were not by statute allowed to have an account, but managed to get their way into the IOR. It was an ideal position for them, particularly when they were Rome resident. It's much easier to have an account at the IOR, or it was much easier to have an account at the IOR, rather than having to fly to Bahamas or to Dubai, clearly. And that is one of the first things we stopped, because we, under my leadership, we signed an agreement with the Republic of Italy, then we signed an agreement with the US and a couple of other countries, which means we are now fully transparent on a tax point of view. That's one example. Another example, because of our past, it was extremely difficult for us to become a member of the SEPA pan-European transaction system, meaning that we could not give our clients an IBAN account number. And that was a long process, but we managed to do it. Another example, you're probably, many of you familiar with Monival, which is the European Institute, depending on the that depends from the European Monetary Authority. And Monival, because the sovereign state of the Vatican uses the euro, Monival has the right to come and audit our institution. And they've done 3 audits over the last 10 years. And the last audit, we had the best possible mark any financial institution can have. Mind you, it's easy, we are small. It might be, but it was not the case before, and we did put in place the processes, but more importantly, we put in place the culture in that institution.
Okay, so faith-consistent investing in a broader sense. You've described it as 70% ESG and 30% something else. What is that 30%? And what are the additional dimensions or moral imperatives that faith-consistent investing brings to the table?
So first of all, as I said, ESG, the roots of ESG are in the Christian scriptures. The teaching of the Christian text, the teaching of the Catholic Church are exactly what shaped ESG. The 10 Commandments, which we are all aware of, the basic principle about prudence, justice, solidarity, and mercy find their way through ESG. So that's at the core. That's what ESG was at the beginning. And then over time, ESG started to take more of a political stance, and hence the backlash we now have in the US. Of course, it is totally exaggerated. But at the same time, when you see major fund management company like BlackRock, who 3 or 4 years ago were one of the most active ambassador for ESG, that is now completely or almost completely getting out of those principles, clearly something has gone wrong. And that's the difference. That's the difference. ESG became politicized. Our faith is not politicized. When I invest according to my faith, according to my belief, this is not politicized. This is, again, being coherent between what I believe in and what I do. And that's a major difference with ESG. So I often use the term to say, whatever the percentage is, 60-40 or 70-30, that's the difference between ESG and faith-consistent investment. A lot of religious institutions say, well, I don't know about this faith-consistent investment approach, but I'm very happy with my ESG. Yes, but ESG has got some major flaw to that extent, and one of them is the sanctity of life. In my faith, sanctity of life is predominant. I cannot invest in a company that would support a number of things that goes against the principle of life. That is not an issue people have when they invest in ESG. So there are important differences, but the cornerstone, if I can say, we certainly share with ESG.
Okay, staying on this theme and exclusions, many faith-based investment strategies have historically relied on exclusion or negative screens, refusing to invest in certain sectors of companies. But you've called for a move beyond exclusion towards more engagement and impact. What does that shift look like in practice?
So when you look at the world of faith-consistent investment, you're probably looking at about 10 trillion euros or US dollar, whatever the currency. It's a huge amount of money. The bulk, almost the majority, is from the Muslim world, probably close to 5 trillion. The rest is the Christian world, and then you've got the Jewish, and then you've got a number of other religions in the East. Most of the approach taken by those religions in the way they manage their money is one of exclusion. I took as an example the issue of sanctity of life and pharmaceutical company. That's what most of the religions do, even if you look at the Sharia compliant fund, it is first and foremost based on a principle of exclusion. But exclusion is certainly not what is the ideal or the ultimate place where we need to be. Engaging with corporation, impacting the corporation in the way we are going to force their agenda is very important, and of course, ultimately, having a more direct impact on society, on the common good, is extremely important. And do not lose sight of the fact that if religion represents more or less those 10 trillion of US dollar, imagine if we were properly organized, if we were very coherent with what we preach, what impact we could have on society through financial markets. That would be very, very significant.
Okay, let's talk about the Mensura Bonum, a guide to measuring investments according to Catholic social teaching. You've been very involved with the development of this. Can you tell us about the inspiration behind it and how it's being used today?
Well, again, a bit back to what I said about this little institute, the Vatican Bank, but also what I've come to realize looking at Christian institutions trying to manage their money. Our first biggest problem is one of lack of competency. So our first issue was, what can we do to raise the level of competency of people in charge with managing portfolio, be it listed securities, non-listed securities, or real estate. So the first issue was an issue of training. Remember what I said also earlier on, one of the challenges we have in the Catholic Church, slightly less in most of the Protestant church, is that money is totally decentralized. From the center, we have no authority over what a diocese, an archdiocese, or a congregation does somewhere in the world. That is their full responsibility, is part of the subsidiarity of the social teaching of the church. So there is no way that we can impose a diktat to say to people, you need to do this and this and that. So the idea was, from the Pontifical Academy, in the sovereign state of the Vatican to publish a document that would be circulated across the global Catholic Church around the world, and to draw people's attention to the need for them to become more professional in what they are doing. That was our first intention, and I think we've done quite well in that first intention. And the second intention on which we are working is to create an ecosystem. Today, if you are, as I am, in charge of a Catholic institution, an institution that wishes to invest according to the Catholic faith, it's very difficult. It's very difficult. You know, a lot of people use the term Catholic fund when they create a product, but you're not sure. It doesn't follow a certain definition. So it's not because you invest in a Catholic fund that you are indeed going to invest in a fund that effectively respects the tenet of your faith. Same thing goes with indices. You know that in the ESG world, there are more than 500,000 indices. Well, it's the same for, quote unquote, Catholic or Christian indices. There's a vast number, but none of them are exactly the same. So one of the challenges is trying to build a better ecosystem for faith-consistent investment, at least on the Christian side. And let me add another example. If you go on Morningstar, I'm sure you all know what Morningstar is. If you go on Morningstar and you type Sharia-compliant fund, so you take a look at the Muslim financial world, you're going to have those long list of funds that appear. Then type Christian funds or Catholic funds. Nothing. Nothing. Morningstar, to whom we have spoken, as yet is not interested to create that category, monitor that category, classify that category, because they say, you Christians or you Catholic, you're not even capable of telling us exactly what should be the principle on which we should base that classification. That's at least their perspective, but we're now in dialogue with them. So training, ecosystem, extremely important, and that really was the basis for that publication, Mensuram Bonum.
And on just a quick follow-up on that, so this is like a missed market opportunity. What do you estimate is the amount of AUM held by Catholic investors around the world, roughly?
So we believe, as part of those 10 trillion, that the Christian world is about 2 trillion. And that splits between church institutions, but also the faithful. You know, Mr. and Mrs. X, who are churchgoer, whether Protestants or Catholic, and have some savings. And today, thanks to the large bank and insurance companies network, at least in Europe, they have been trained to invest more ethically, because all those big institutions have told them you should invest in those ESG funds. So part of the journey has been delivered by those large institutions, but now they need to move from ESG into faith-consistent investment. But they can only move to faith-consistent investment if there are the right products out there to service their need.
All right, so as a last question, for the family offices and foundations in the room who may not be faith-based but are deeply committed to impact, what can they learn from the faith-consistent investment approach, and how might it complement their current strategies? Well, you know, certainly they can learn from the values we are trying to stand up for, again, beyond what ESG is today. And they can also certainly learn from the journey in which we are embarking on a global level. You know, in order to be a faithful servant, as we say in the scripture, in order to be one that effectively manage ethically in coherence with one's belief, you need first and foremost to change the culture in the organization in which you operate. Changing the culture is at the root of being a good ethical investor, and it will take more than just investing in ESG. I didn't get a chance to ask you about Le Collège de Bernardin. Can I ask you very quickly, in your new role and your new engagement there, what are you hoping to do with the direction of global finance? Well, we're trying to do two things. So the Collège de Bernardin is a very unique institution in France. As Carol said, it's really a bridge between the church and society, very highly regarded in France. And the idea is to do two things. One, create a training center for faith-consistent investment. Of course, we are starting with a Christian perspective, but ultimately we may be working with other religions to develop training for other religions. And two is to provide research on religious finance. I mean, one of the key things that people always ask us is, but if I invest
in a phase consistent investment, whether I'm a Jew, I'm a Muslim, or I'm a Christian, if I invest in one of those funds, am I going to make less money than if I invested in the stock market, directly? We need to help people understand what this exactly represents, what could be the consequences, and certainly in many cases take away from them the wrong perspective that they had from the beginning. So it's a center for training, and we're also building a center for research on religious finance across the world.
Okay, so raising competency everywhere. Jean-Baptiste, thank you, not only for sharing your insights today, but for the clarity, conviction, and courage you've brought to aligning finance with values that serve the common good. Your work reminds us that markets are not neutral. They reflect what we choose to prioritize. And your leadership challenges all of us, regardless of tradition, to think more deeply about the purpose of capital and the legacy it leaves behind. Thank you.
Thank you very much.